Hello, friends. This is Arvind Palsing here. So we are back with the weekly sessions. This time we thought of making a little bit change here in the format. Instead of a training on a particular topic, our trainer ma'am suggested let's have a quiz, make it a little bit interactive, fun time. And also, I think this is a good opportunity for you to test your knowledge. And we also come to know, how much you have learned from these sessions. And accordingly, we can design the next sessions as well. So without further delay, let's have a look at this quiz. Yeah. First question. A concept assumes that business has perpetual succession is known as, and options are accounting period concept, business entity concept, duality concept, going concern concept. So anybody who wants to answer, please unmute yourself and then answer. And also preferably give a reasoning as well, why you think other answers are incorrect and some answer is correct.
A and B both are not the correct answer. D is the correct answer. Going concern concept. It simply says that a concept assumes that business has perpetual succession. Perpetual succession means business will go on. Whether I remain there or I don't remain there, A may be there, B may be there, C may be there, but business will continue. Like you take the example of Reliance Industries. You take the example of Reliance Industries. So earlier, Dhirubhai Ambani started the business. Reliance Industries was owned by them. Later on, Mukesh is now continuing. Dhirubhai is no more there. Then even Mukesh also ceased to exist. Tomorrow, if he retires, then his son will take over. But business will go on. This is perpetual succession. This particular thing is known as perpetual succession. That anyone may come, anyone may go, but business will continue. This is known as a going concern concept. Going concern concept. Is it clear? We can move on to the next.
Yeah, I just want to add something here. So in this one, we can say that going concern is basically an accounting concept. This is used for those companies who, those companies need to run their operations for indefinite period, not indefinite, but at least for a longer period, for the continuous period. And also, there's enough ability for that company to make enough money, and they should be avoiding bankruptcy. So that kind of additional thing we can add to this point.
Right. And one thing more I would like to add here, that a going concern does not mean that company cannot be wound up. It can be wound up, but of course with a particular situations and with the will of all the participants in it, all the stakeholders in it. The company can, like in due course of time, it can wind up also.
So when you say stakeholders, is that only the directors or management's side or the shareholders?
Then in that case, all the stakeholders like creditors have to be there, bankers have to be there, equity holders have to be there, all staff. Everyone has to say that yes, it can be wound up now. So then then there's a set procedure for winding up of a company. That's a very long, I think 6 months to 1 year long procedure. We have to follow that procedure and then we can wind up that business.
Okay,
so that nobody is at loss. Nobody is at loss.
Okay, so basically there's an assumption that this business will keep on existing in the future, near future at least, and it won't liquidate so easily, or it cannot go out of business so easily, unless there is consensus from all the stakeholders and all.
Yes. Yeah. It's not a day or two job. It's like a continuous business.
Yeah, makes sense to me. Yeah. Thank
you.
Then
next question. Yeah. Question 2 is?
So second question, we got inventories are current assets, current liability, revenue, expenditure. Anyone who wants to answer, please unmute yourself and explain.
Answer in chat box also, if you hesitate to answer.
So I'm just throwing one guess here. I know it's wrong, but still, current liability. Is that correct? So we got multiple answers here, and A is coming up. D is also coming up. I'm curious why D is there. Would you like to explain why you answered expenditure?
I will clear it.
Sure.
Yeah. Inventory is something whichever is in our stock, and stocks are our assets. अगर किसी को language में barrier है, please stop me there itself. I will just explain the same thing in Hindi also. Stocks जो है वो हमारे current assets हैं, क्योंकि वो हम अपने business को continue करने के लिए रखते हैं, so that we can sell those stocks, then we can convert that into cash, and again from that cash we can make the purchases. But when we purchase is an expenditure, लेकिन purchase से जो हमारा stock create हुआ है, that is current assets. So inventories are not purchases, inventories are current assets. If I say material is our purchase, so material will be covered under expenditure. Inventories will not be covered under expenditure. So please be very clear about the difference between material and inventories. Okay?
Yeah, I'm getting mixed.
You want to add something?
Yeah, I'm getting mixed up in stocks. When you say stocks, it gives me a feeling that stock, share, those kind of things. What could be other proper word for the inventory instead of stock?
Stock and inventories, these are the two things. Or other way we can say
like
stock
I said,
of raw material.
Stock market, right? You don't mean stock market.
Market is different. No, we don't mean stock market.
Exactly.
Here.
Yeah.
I will just tell you. When we talk about inventories, in case of stock market people who are dealing in shares, why they call it stock? Because for them shares are the inventories.
Okay.
For them, because they are dealing in shares. What we are dealing in is inventory. If I am dealing within grocery, so grocery is my inventory. If I am dealing with fabrics are my inventories. So whatever goods I am trading in, these are my inventories. So share brokers are dealing with the shares. So shares are their stocks. So that's why the convenient term has come out is stock market. So stock market does not mean inventory market. It is a share stock market.
Okay.
So there's a very it's not basically that's a misnomer. Earlier it used to be like we used to call it share market, but gradually over a period of time it has come out like a stock market, but it is not exactly the inventory market.
Sure.
So inventories consist of your raw materials, your work in progress, your finished goods, spares, consumables, whatever you have kept with an intention to consume to run the business is your inventory. So that is your current asset.
Good.
This is the basic idea behind it. So should we move to the next?
Yes, please. So next question we have, an obligation which may or may not materialize is known as current liability, contingent liability, internal liability, non-current liability.
Should I explain the question in Hindi?
Yeah, sure. Please carry on.
Yeah. एक liability जो कि हमें पक्का नहीं पता कि वो materialize होगी या नहीं होगी, मतलब वो पक्का हमारी liability है या नहीं है. For this we are not sure. So in that case we have to see that under which category this liability will account for. I have got some answer. Oshin Rajpal to everyone is saying that D. No, madam. D is not the answer. Even option 3 is also not the answer. Anand is absolutely correct. Contingent liability. Anand, correct answer.
So what's the English meaning of contingent?
Contingent means it may happen, it may not happen.
Okay.
It may happen, it may not happen. So contingent liabilities are not necessarily our liabilities, but what happens earlier, what it used to be like what companies used to do, like suppose they have some certain kind of liabilities, like insurance companies. So they don't know whether, suppose they have like one thing is they have clear claims. Another thing is claim may arise. So there the contingent liability arises. So they never used to provide for any provision But now the as per accounting rules, it is compulsory that auditor has to report on the contingent liabilities also. It may happen, it may not happen, but you have to provide for.
So
that if tomorrow it happens, then our profit and loss doesn't get affected.
Okay. So in the other professions, we have something called risk management plan. Is this part of the risk management where something may or may not?
Yeah. The basic idea behind providing contingent liability is risk management.
Okay.
Basic idea behind providing contingent liabilities is to manage your risk, to provide some provision for your risk management.
To mitigate
but not
that.
100%. Yeah, to mitigate that. Anand is asking, can we include unpredicted future expenses? No.
Okay.
Okay, should we move on to
please.
Next question?
So next one, which of the following is generally a long-term budget? Cash budget, sales budget, research and development budget, capital expenditure budget. So long-term as in country level?
No. Long-term means beyond 1 year. A budget which is going beyond 1 year. Like last time when we saw that budgeting exercise, you must be remembering that we had talked about that it can be a day plan, it can be a year plan, it can be a 5-year plan. So I've got two answers. Both are saying R&D budget. No. Third answer also I got is R&D budget, but sorry, no. Research and development budget may be long term, may not be long term, but capital expenditure budget is necessarily to be the long term budget.
Okay.
Yeah, because research and development, it may be like 2 years plan, 1 year plan. But in case capital expenditure, it cannot be short term. It has to be long term only. 5 years minimum, we draw that. Because today,
I guess the keyword is generally, right? That's the main word to identify this thing. Yes. So R&D could be less than 1 year. It could be more than 1 year. That's why it did not qualify as an answer.
Yes, correct. That term generally we have to consider. That is not too general to miss.
So that was a tricky question, actually.
Yes, actually, in our CMA course and also in our life, also we mostly get such tricky questions only.
Okay. Yeah, I'm good.
So we can move on to next question.
Yeah, please. Okay, so I see the next question. Legal cost of buying property is, options are revenue expenditure, capital expenditure, personal expenditure, non-current liability. Legal cost of buying property. Sounds like personal expenditure, but I'll wait for this.
No. B is the answer. That is the capital expenditure. Now you will ask, why?
Yeah, sure.
Because if I am buying property, purchase of property is not my routine business. So if I am a property dealer, then legal cost of buying property is my revenue expenditure. But I am not a property dealer. I am buying a property either to run my business. Either it is a shop or it is a factory or it is something like that. We are talking about the business property, not the housing property. If it is housing property, then it will be a personal expenditure. And if I am a property dealer, it will be a revenue expenditure. But if I am a business entity and buying business property, then it will be a capital expenditure. Because that business is going to own that property for a long term. And so this legal cost of buying the property will be added in its cost of purchase. So it will become automatically capital expenditure.
So I think
correct answer is
it should have a qualifier there that for a business, legal cost of buying property is capital expenditure, right?
Correct.
Because that qualifier is not there. Probably that's why it's misleading. No?
Yeah, but what is happening when we talk about so much of accounting and all? then in that case, it is presumed that we are talking in context of the business. We are not
Okay.
talking in context of like a normal person. Because
Got it.
had it been personal thing, we would not have discussed here. Since it directly affects the business, that's why we are discussing it. So it
So-
is implied, and yeah.
Okay, so in case the qualifier is not there, like, because it's CMA session, so let's say instead of the actual question is, for a particular business, legal cost of buying property is capital expenditure, right? That's a complete
Right.
statement. If
Right.
I change it to, for an individual, legal
Right.
cost of buying property, will that be personal expenditure or something else?
Whatever, now that depends that if he is buying a personal property, whether he is maintaining books of accounts or he is not maintaining books of accounts, it will again qualify into two parts. So if he is maintaining books of accounts and like preparing his own balance sheet, filing income tax returns, in that case, he can simply add that to the cost of property. So in any case, it will be added to the cost of property. So that's why if it is a personal house or household or something, then and if we are not maintaining the accounts, then we can call it as a personal expenditure. But otherwise, in any case, it will be a capital expenditure.
Okay. So in the context of the exam, we should always consider the statements as
Capital
for a
expenditure,
particular
yes.
business, for this
For
business
a
and all,
particular
right?
business. Yes.
Okay.
That is an implied, you can say that is inherent general condition there in examination questions.
Good. Thank you. Yeah. So we got profit earned due to sale of a fixed assets is revenue receipt, revenue expenditure, capital expenditure, capital profit. So I guess we should be knowing the meaning of these terms, then only we can answer all this.
Okay.
Yeah.
So anyone who can answer those, I'll explain these four terms. Revenue receipt, I think we have already, yes, Anand has given correct answer. Anand has given correct answer.
Okay.
Revenue receipt is something which we are getting out of our normal routine business. Like if I'm selling something, if I'm giving my services, that is all revenue receipt. Same is revenue expenditure. And here we are mentioning profit earned. So it cannot be expenditure. So revenue expenditure and capital expenditure is ruled out. And last thing remained is capital profit. So here in the question, even if you generalize the whole thing, so the term used in question is profit earned, and in answer only one term is having the term profit. So that is the correct answer. So profit earned due to sale of fixed assets is a capital profit.
Very nice. Thank you.
Yeah. Next question we can have is.
So next one, we have book of final entries called bank book, purchase book, bills receivables book, ledger account. Book of final entry. Okay.
Yes. This we had shared when we were discussing our basic accounting practices. And I think every person who is just into accounting studies or practices or knowing little bit, he should know this. Even when we go to the banker also tells us that update your this particular document. So that is ledger account. Answer here is yes. Peaceful by Design has given a correct answer. That is D.
Very good.
It is the correct answer. Ledger account. Ledger account is called as book of final entry because if once some transaction is recorded there in ledger account, it is final. And from there, it will go to form the profit and loss account and all. It will like go on its journey. So D is the correct answer. Rest other books are primary books. These are not final entry books.
Very nice.
The next question.
Yeah. So we have got next question. Opening balance of cash as at 1st April 2021 will be entered in cash book, purchase book, sales book, bank book.
The answer is already given in the question itself.
Oh.
Yes, just
Opening balance of cash. Cash book.
of course, so simple. It is so simple. Yes, correct answer.
So next one we have a statement of debit and credit balances is called. We got options: balance sheet, profit and loss account, trial balance, funds flow statement.
Again, the answer is there in the question itself.
Debit and credit. I think I know, but this answer looks wrong to me. Yeah, this looks better. I'm guessing it's profit and loss account. No.
No.
So balance sheet.
No. Trial balance. That is the correct answer.
Which one?
What we
Trial
are
balance?
saying here,
Oh, balance.
trial balance.
Hmm.
Yes. The term you have to match is balance.
Okay.
Balances. There we are, what we are saying is a debit and credit balances.
Yes.
In balance sheet, what we are saying is it is a sheet carrying the balances. But
Okay, makes sense.
inherent, like it carries both the balances, debit balances as well as credit balances.
Okay.
So it is always statement of debit and credit balances is called trial balance. Answer is, who says it's balance sheet? No, it's not balance sheet. Answer is,
Yeah. Anyone who was not paying attention to your
answer is,
sessions said balance sheet.
yes, I think so.
Looks like I'm
Answer
also
is
one of those. Yeah. So
so
you
that's
said,
why in the morning itself, I requested in the group that please go through these sessions. I shared the recording also, but I
Yeah.
think still nobody had gone through it. So it's trial balance once again. So we'll move on to next question. Yeah, this is very simple. I think everyone will answer this.
So we got salary is a remuneration for. Options are land, machinery, manpower, enterprise. Yeah, unless we consider ourselves machine, then the answer is obvious.
Yes, correct. Answer is very obvious.
So let's see what our friends are telling us.
Nobody's telling anything. Please come out. Yes, we got one answer.
Yeah.
Answer is C. No, it's my answer only. Yeah, Oshin Rajpal is saying its answer is C. Correct. That's the correct answer.
Good.
So that was obvious. Yeah, now it's a good question.
So we got, if advertisement is useful for 4 years for generating revenue, then it is capital expenditure, revenue expenditure, deferred revenue expenditure, net loss. If it's useful for 4 years for generating revenue. Okay. It looks like some kind of deferring thing, but let's see which. So we got
Yes,
options.
yes, we got one correct answer and one wrong answer. Correct answer is C. That is deferred revenue expenditure. Why so? It is not a net loss. That is number one. It's not a revenue expenditure because the benefit is being carried over to 4 years.
Okay.
And it is not a capital expenditure because no capital asset is being created out of it. So no question of being it a capital expenditure. So what is left is deferred revenue expenditure.
Okay.
So deferred revenue expenditure means an expenditure which has incurred in year one, but its benefit will be carried over for 3 to 4 years. So here the term is 4 years. So it is a deferred revenue expenditure.
Okay. Next.
We move ahead.
Yeah.
Yeah.
So we got budgets are shown in terms qualitative, quantitative, materialistic, both quantitative and materialistic. We got one answer.
Yes, it's correct answer. Both B and C.
So budget has got quantity as well as material in there. Okay.
Materials, yeah.
Okay. Good.
Means all physical things have to be included there.
Uh-huh.
So we can move on.
Yeah, we got last 3 minutes, so just keep that in mind, please.
Yeah, we will just take 2 more questions.
Sure. So next one we have cost units of hospital industry is ton, student per year, kilowatt hour, patient day.
It's a
Hospital.
very common sense question.
Oh, yeah.
Very common sense question.
Unless it's a medical hospital college, then answer may change. No?
No,
No, okay. Still, it will be D or whatever our friends tell.
correct. D is the correct answer. Next question is
Depreciation is shown in balance sheet, profit and loss account, both balance sheet and profit and loss account, then receipt and payments account. Depreciation. It's coming in the one answer is balance sheet. Again, next one is also balance sheet.
In fact, answer is C. It is shown both in profit and loss account as well as in balance sheet at both the places.
Nice.
So both A and B is the answer.
Okay.
So can we take one more question?
I think so. Yeah, just one last question, then we'll wrap it up.
Yes, reorder level is?
So reorder level is options are method of inventory evaluation, point of placing the order, quantity of placing the order, and then all of above. We got one answer D.
Okay, we have got one
Another
more
one
answer.
we got A.
No, both are wrong. Correct answer is C.
Quantity
C
of
is the
placing
correct
order.
answer. Yeah.
Okay.
No, sorry. Correct answer is B. Placing point of placing the order. Reorder level is point of placing the order.
Okay, very good. Yeah. So I guess we are already done with this session, almost about 30 seconds now. So let's wrap up the session. Thank you very much. This was very interesting, actually.